First of all, let's talk about equities. This is the highest time frame tip bar chart on the 4,000 tip bar chart using the multiple time frame stuff. This is the last several days. This was the overnight, which is when Trump was seen to be winning, and this thing just dove off a cliff. This is the day session afterwards on the Wednesday night, Thursday, and we're coming into the overnight session with the open on Friday. Now what's interesting is kind of pre the election, the equities market was saying a Trump victory would be a bad thing. And now we have a Trump victory. All of a sudden people are starting to say, okay, if that's the case, how does the new world look? And I don't think the new world necessarily looks all that bad from a business perspective under Trump. After all, the guy's a businessman. He's going to make it better and easier to be business people. I think Hillary, if anything, was anti-business. So let's see. And I think the equities markets are starting to readjust a little bit and say, actually there is some upside here. Some of the kind of what was seen to be winners 3 or 6 months ago are now seen to be kind of losers going on, so there's a changing in guard going on. But equities could have a good kind of run. Having said that, though, we are going through it was a big decline into exhaustion sell, and then we had a huge rally into exhaustion buy. And at the moment we're having some weakness. So we've had exhaustion buy, bearish divergence come in, then we run this thing out with a pullback to end of trend on the highest time frame. That's what this biggest dot is there. We get a change in trend, low risk entry point, and we've got a confirmation of a downtrend. So at the moment the market is weakening, kind of down there on this highest tip frame. So let's see where this next kind of leg down and the next support kind of comes in on the 4,500 tip bar chart. But that change in tune could be a reassessment of the equities markets kind of going on. Who knows for the time being, but it's been an interesting ride. Now the one thing that has kind of come out that's been not kind of crystal clear, but certainly there is a change of tune, bonds. And we actually saw this in bonds. I put out the video a while ago after we had this exhaustion buy, bearish divergence kind of come in, and it's a classic 5-step setup. I was very unsure about this a few weeks ago because like I kept on saying, calling an end to the bond market is an exercise in futility, but it is a 5-step setup. Exhaustion buy, bearish divergence kind of comes in there, bang. End of trends. We had pullback to end of trend on the highest time frame, and then we go through 2 little cyclical turns after that. I would say the second cyclical turn after an end of trend is an interesting kind of reversal point. So we got all that resistance kind of coming in there, a little pullback to end of trend on the intermediate time frame. We had one on the left shoulder here with pullback to end of trend on the lowest time frame. So that's step number 2, all of the setups there. The first sign of weakness, bang, there it is, it came in, and then we had the low risk entry point happening here on that pushback. And now confirmed downtrend. We got breaks of 2 time frames kind of going on. So that's an interesting thing. So that's the 10-year chart. The 5-year chart looks very similar to that in terms of the 5-step setup. Pullback to end of trend on the highest time frame. Exhaustion buy, bearish divergence. We break into a downtrend. We got our low risk entry point a few days ago, and now we had an absolute kind of collapse in bonds kind of going on there. And the 30 years, same picture, although we overshot a high time frame resistance, and it didn't come up to be a pretty little resistance like here on the 5 or the 10 year, but same picture. So bonds, that's very kind of interesting, and a mental shift with a new presidency and a new kind of direction for the economy, the country, and so on, could be that change in tune that we needed for the bond market. So let's look at that. Now I wish I'd jumped on board this because I could see it happening, but I was just unwilling to take any positions as we were coming up into the election time. But we had this one. We were looking at crude and copper side by side as kind of commodity markets that were due to take off, and I was maybe concentrating too much on the crude trade. Meanwhile, the copper trade just took up like a bloody rocket, and this is so obvious as well. Look down here. I mean, we had our exhaustion sell, bullish divergence. We had all these pullback to end of trends on the highest time frame, the intermediate time frame, the low time frame down here. We then put in another cyclical turn, second cyclical turn after end of trend on the highest time frame. Look at this. There's the end of trend on the highest time frame with that big red dot. Bang. Second cyclical turn, 1, 2, there down here. We knew $2 was an absolute line in the sand that was an important marker for the market. So we get exhaustion by bearish divergence, all our pullback to end of trends. We then break into an uptrend. There's our low risk entry point, my God, right at 208. And then we got, confirmed uptrend going on here, bang, and this thing just takes off like a rocket. So there's still an opportunity to kind of get into this. This thing has just taken off. So I'm looking at the ETF. Let me just show you the commitment of traders charts as well. This was weekly and monthly commitment of traders charts. Remember, the data is only weekly, so you can only chart a weekly. You can't do a daily chart. And here are the bullish divergence. On the monthly charts, bang, bullish. There's bearish, bullish, comes in. Even on the daily, on the weekly charts here, all these bullish divergence at $2, $2.20, bang. So we had, the commitment of traders was absolutely showing that. And here's JJC, which is the ETF for this, which was just a beauty in terms of the setup. Downtrend, exhaustion, sells, bullish divergence kind of comes in, pullback to end of trends and supports. We're breaking into an uptrend. This thing anywhere in the kind of mid to low 20s would have been beauty of a buy. Anyway, so I've missed it for the time being, but I'm itching to kind of get into that. Meanwhile, crude has not kind of taken off, and I think partly because of, again, some of the announcements out of Trump to do with policies on fracking in the US, domestic energy policy and so on. It's pointing towards more supply rather than a reduction in supply, and so the price of crude hasn't kind of bounced as yet. But I'm still hopeful. We're kind of down here. We know this is an important area in the kind of the 40s. We've made our pullback to end of trends here on the highest time frame, still showing weakness at the moment, but it's not confirmed weakness. This is showing red, so that's kind of showing kind of confirmed uptrend. So it's some weakness going on there, but geez, this is looking pretty important at this level. If we start closing below this last support here, I don't know, crude's going to take a while to kind of turn around. However, oil services is starting to take off. So this is an ETF. This is OIH, which is oil services, and that, because of the increased fracking that's going to be going on, and the pipeline's going to be built, and blah blah blah, there's going to be a lot of oil services kind of stuff going on. So this one has started to perk up. So pullback to end of trend on the highest time frame's gone off. You can pull back end of trend, and there's a big red dot that shows that. We've had our exhaustion sells and bullish divergence and flush patterns kind of come in. We had a little bit of it's not short covering rally necessarily on an ETF, but certainly kind of anxiousness to get in and buy that kind of low there. And now we've had first sign of strength, low risk entry point kind of come in. We just need to kind of cross 30 or so, and we'll have a confirmed uptrend on oil services. So although crude itself is not taking off, possibly as yet, I'm hoping, but oil services does look kind of possible. Oil exploration, possibly the same thing, but not quite as strong as oil services. So we're making this pullbacks and kind of end of trend support area here. It's kind of shown weakness kind of lately, but in the last couple of days it has kind of perked up. So I'm looking at those two, XOP and OIH, as those two ones that are kind of alongside the crude picture. Okay, let's talk dollar index. Now, dollar index, that's kind of cruising higher at the moment, about to break kind of all kinds of resistance and so on. And again, possibly this is similar to the equities kind of story, that there's a change, a fundamental shift where people have to kind of rethink where their dollars are best invested. Is it the UK and the US kind of going forward, and not, Europe, the old guard, Latin America, whatever, blah, blah, blah. So let's kind of wait and see, but the dollar index has continued some strength here, and although we've got exhaustion buys going on here, we've not seen bearish divergence, we've not seen end of trends or any of those. So I've got to say this is in a confirmed uptrend and a continuation of this uptrend until we start seeing those things. So can I get with the picture here? Euro, meanwhile, where I was looking at this and saying this is an important level, kind of down here, we've had continued weakness from April, May kind of going on here. You can see that with all of this. I think what's going on there is people are starting to say, hey, well, if this kind of silent majority kind of gets out and votes in numbers because they don't like the way everything's been going to date, a la Brexit, a la Trump, then all of a sudden the rest of Europe is in trouble, because dominoes, Brexit's domino one. The European project will not survive another biggie going. It's like, yeah, they can maybe deal with the UK leaving because it's an offshore country and so on, but anything on contiguous, mainland Europe, whether it be Italy, France, well, is that possible? Germany, anything like that. Even Netherlands or something kind of choosing to exit and so on, all of a sudden there are chinks in the wall and the thing looks like it's going to fall, and so all of a sudden we're not so confident about the euro kind of going forward. So we're through this 11.10 111 kind of level on the euro, and that's incredibly important. And is the next stop down parity or 105 and then parity? Who knows? But so we've got no strength happening in the euro going on, and that's a result of just rethinking of the mainstream media kind of story that everything will be fine. No, we're having a revolution kind of happening here. Meanwhile, British pound, what do you know? Okay, here's Brexit, bang, and I said it was way too early to call a change in trend until we start seeing pullback to end of trends kind of going off. So we've had another exhaustion pattern going on here. We had some bullish divergence kind of lately. There's our little pullbacks to end of trend on the lowest time frame. Now we've had our pullback to end of trend on the intermediate time frame, and what do you know, the last couple of days we just had our first sign of strength kind of breaking above here. So we've still got to put in pullback to end of trend on the highest time frame, and this thing's got to pull back and show low risk entry point and all of those things, but as an early sign of an area where they're starting to say maybe good value in the pound and what's going on in the UK economy at 120 versus the US dollar, that's looking interesting. So the first little sign of strength there. Can we see it in the equities market? So here's EWU, which is an ETF that tracks the UK equities market, the FTSE. And here we go. We've got our exhaustion patterns and flush. We've come back again and exhausted like a double bottom. Now this is almost like a head, shoulder, head, shoulder, inverted, shoulder, head, shoulder kind of going on here. We've broken through supports, I beg your pardon. We've got a whole bunch of weakness kind of going on here, but it is a flush pattern going on there. Very little selling going on. Rambo right there, right at the lows. So, and some interest all of a sudden in the UK's equity, the FTSE 100 market. So let's wait and see. Too early to call changes in trend, but we need to start kind of rethinking the investment environment. Now, I'm long into RSX, which is Russia. I'm still holding. Had a little bit of weakness the last few days, but it's kind of poking out. Not that things are looking particularly good, because there were three things that were part of this investment thesis into the Russian market. One is pick up in crude prices, two, pick up in the ruble, and three, which was the real outlier, which is a Trump victory, which all of a sudden we mean kind of détente and a warming of relations with Putin and so on. All of a sudden, the US and the Russians start working a lot closer together. All of a sudden, a lot of those economic sanctions get lifted on Russia and so on. All of a sudden, the Russian environment is a far better environment in terms of results and investment. So two of those things are not going well. Let me just show you the ruble chart at the moment. So just over the last several days, this is a data glitch in TradeStation. I wish they would fix it in the ruble, which I kind of hate. But this is the ruble kind of futures, RU, and yeah, it was nicely kind of launching ahead, but the last couple of days we've come down from 16 down to 15, so that's not kind of particularly good, and the crude price is not particularly good. But meanwhile, RSX, a little bit of profit taking here, or I don't know if that's profit taking, but it's a down day yesterday, but still we are in an uptrend here. So I'm still holding on and see what happens, but there's a kind of investment kind of theme there. And last one to talk about is Bitcoin. Now, gold and silver are not doing all that well at the moment. Maybe had their kind of moment in the sun for the time being, and usually Bitcoin is viewed as like a little bit of a electronic gold, if you like. Here's the Bitcoin kind of price. This is the New York exchange, New York Stock Exchange Bitcoin price. This is in TradeStation dollar NYXBT, if you want to kind of plot that. It's not a lot of data on it. It's not got the full history, and it's not got I don't know if it's got open, high, low, close. I don't even know if it has that. No, it just has kind of closing prices. I look at it in USD, plus I look at it in Aussie dollars. So this is the Aussie dollar. Make a little kind of calculation because I'm interested in kind of hedging my Aussie dollar exposure with Bitcoin. So I'm into Bitcoin at the moment, and this is kind of about to break to kind of above this kind of recent high. So again, we had some bad news out of China where they were looking at Bitcoin as a potential way that people are getting money out of China, and they might kind of crack down on that, and that was a little bit of bad news that we had a few days ago. But then, the last couple of days we've had India is starting to mess around with cash banknotes and so on, and we've got problems in Venezuela. Bitcoin is a way of people kind of getting out of a monetary system that is starting to break down and not work, or move money kind of internationally as the Chinese do using Bitcoin. So any kind of political weakness in Europe, all of those factors of uncertainty kind of layer into the whole kind of Bitcoin thesis, and why Bitcoin has continued to strengthen. So again, another opportunity to kind of look forward to over the next kind of several months. Kind of the jury's out in my mind in terms of equities and whether we'll kind of continue higher. Certainly the bond market looks pretty crappy at the moment, and so that's going to have an impact on a lot of things. Copper, let's just hope for a decent kind of entry into copper over the next couple of weeks. I'll be looking at that really closely. Oil's not perked up yet, but oil services and oil exploration are starting to perk up. That's really interesting. And then the euro's looking like crap, but the pound is looking better. And it's early days, but it might be worth following what's going on the FTSE, the London equities market. Still into the Russian market. Still think that's kind of holding out for the time being. Although the two of the three components of that, the ruble and the crude oil price, are not kind of working out. And lastly, Bitcoin. Anyway, so there's plenty of charts to look at, plenty of things to kind of see and do. We don't know what's going to happen over the next 6 months or so, but geez, it's going to be kind of interesting to watch how the whole thing. And just remember, be water, go with the flow. You need to plan, take advantage of the opportunities, look after yourself, look after your family, look after your friends. Thank you for letting me rant on a little bit. I hope your trading is doing fantastic. I'm going to put up some charts, because during the Trump election there were just 5 or 6 after 5-step setups that kind of popped up on the charts, and they were just beautiful trading. So I'm going to put those up and show you what was kind of going on during that kind of 48-hour period where we had massive flows and volatility, and the markets were kind of smooth and speedy, and it was kind of good. Anyway, hope your trading is going well.